Recording in progress.
Hey, welcome back. Imagine your grandfather has recently passed and you inherited his triple decker in Southie. It's appreciated in value $2.5 million. This is when you really need to understand the 1031 tax exchange. 1031 is an IRS tax code. It allows you to defer your capital gains tax from the selling of an investment and the purchasing of a property as an investment. I'm Larry Lawfer, your host each week here on Broker Talk. Thank you for your questions and your support. Each week, we bring you an expert on a specific area of real estate. Our guest today is a seasoned banking professional with one of the most trusted, qualified intermediaries in the nation. Welcome, Michele Fitzpatrick of Northern Bank to Broker Talk. Welcome, Michele.
Thank you, Larry. I'm glad to be here. Thank you for having me.
It's a pleasure to have you. So let's just jump right into it because we all know that the inventory there's zero inventory out there across the towns, and if you are doing a 1031 tax exchange, you have some qualifications that you have to do. And let's talk about in today's environment when there's no inventory and you have the two things I'm talking about, the time and how do you succeed in this environment?
Yeah, that is the challenge, isn't it? And I'm sure that's the challenge for
Yeah.
every realtor out there is looking for good properties for their clients. And our exchange clients really have, they face that struggle every single day. We're dealing with that. And I always let them know that this is where a good broker comes in. This is
Yeah.
where a good agent comes in, a trusted advisor comes in. You want somebody to go out there and find you a property and really be that bulldog, get your offer accepted, get you in properties that may not be listed, and get in and be the first one to get in and put the highest and best offer in when you
Y-
can.
Yeah, I would think that would certainly be the case to get there. But what I was talking about was the requirements um, based on have did I lose your sound? Did you say?
No,
Oh, okay. It was just me messing with tech stuff. Um, the requirements and restrictions: 45
sure.
days and 180 days.
That's right. So there's a very strict time restriction to do an exchange. So your exchange period starts on the day that you sell your relinquished property, and you have a 180-day exchange period, which is typically not the problem. Closing on a replacement property in 180 days is really the easy part. Where it becomes difficult is the 45-day identification period. So the
Right.
initial 45 days, you need to identify a replacement property. There are a couple different rules of identification. Most people identify three properties. They usually put their dream property number one, and then they have a couple backups just in case. But there's also a 200% rule, which allows them to identify an unlimited number of properties. They just can't exceed 200% of the value of the property that they sold.
Okay.
So
Well, that comes in. And that comes in later in the transaction because the 45 days, if you put something on the market, it's going to go on more than under 45 days.
right,
It's going
maybe
to
under 45 minutes.
yeah. The silliest thing I think for you real estate agents who are paying attention here, stop touting yourself on social media about getting something closed over a weekend with a little bit over asking price. That's what you're supposed to be doing right now. The hard part is finding properties, and there's a
Right.
variety of ways to finding off-market properties. Do you get involved in that aspect of the business at all, or do your clients come to Northern Bank with a property already identified?
Both. So sometimes we have clients that have very niche properties and they're really looking for a specific buyer, or they want to get somebody that's all, ready to go. So they're looking for buyers, and we always have buyers because we always have exchange clients that are in the middle of their
Right.
exchange. So
Right.
it is something that we do pretty regularly. We try to connect people together. But what's great about the 1031 exchange is that when we're talking about like kind properties, we're talking about investment real estate for investment real estate.
Right.
So if somebody's coming out of a two-family house, they don't have to go into a two-family or a three-family. They can go into
No.
a single family. They can go into a condo. They can go into a piece of land as long as it's investment property. They're
Yeah.
not using it for their primary residence and they're not using it as a second home, would pretty much qualify. So again, it's working with your agent and really trying to figure out what's going to work best for you and what type of investment may work best for you. So
Right.
somebody may come in and say, I definitely want a two family. And an agent finds a spectacular condo that's going to cash flow just as well. It might be a good option for them. So keeping your options open is really important in this market.
Well, certainly if you don't have a boot, if you don't have extra money from is that what it's called? The boot, the extra money. Um,
That's correct.
I am going to bypass some of the rudimentary stuff. There may be people here who are wondering what are the exclusions, if I'm an LLC, if I own it with somebody, all of that kind of stuff. I'm going to say that's the easier stuff. Ask an agent, and if the agent doesn't know that, find an agent who does, because there are some exclusions, so some things you can't do. I want to talk about the things that you can do, and the best use of this. So the first is right now identifying property. And even doing that before you put your first property, because usually the 1031 tax exchange is two deals. It's not one deal. Sell of a property, purchase of the new property. That allows that tax to not be taxed at that point.
Yeah, that's exactly right. And that's what I tell a lot of agents as well when we do these classes for 1031 exchange to realtors, and agents and brokers. What we're always telling them is this is a great tool to have in your toolbox. This is a great way for you to go in and be that listing agent and become their trusted advisor. A
Right.
lot of people don't know about 1031 exchange. We get a percentage of people who this is their only property. This is their only investment property. And like you said earlier, it may have been inherited. It may be something that they bought 30 years ago. They're not, the typical real estate super savvy investors. They happen to have a property in Southie that is now worth $2 million. And they have to figure out what to do with that
Yeah.
and how to avoid the taxes or defer their taxes.
Right. The timing is so critical on this, and anybody who does this day in and day out would understand that and could prioritize the sale and the purchase and get it done well within those 45 days. But it can be nail biting, I guess is the
Yes,
word.
yes, yep.
You know,
And you're right. A lot of people come to us with their property, with their replacement property already picked out, because that's the hard part. So they'll come and say, you know what, I have a replacement property. I put it under contract. I'm now going to put my relinquished property up for sale, knowing that it's going to sell immediately, that they may get a cash buyer and it's going to take 4 weeks to closing, and that they can schedule those fairly close together. So oftentimes in this market, we're finding people that are on top of it, that will come to us with their replacement property already picked out and already under agreement, and close their relinquished property one day and their replacement property a few days later.
so exactly. So qualified intermediary, a QI, that's a buzz term within the industry. And my understanding is because you are not paying your taxes, it's got to be a hands off proposition. You can't hold your money and then give it. And I say, I promise I'm giving you all of it and I'm not you say keeping it. You can't do that. So you need someone who is qualified to be the intermediary. So you are what you do.
Yeah, that's exactly what we do. I mean, the IRS requires a qualified intermediary in these delayed exchanges. So that is a requirement. And it's important to go out and find a qualified intermediary that is reputable, that is, they have specific controls in place for your funds, because we have a very important job. We are holding the proceeds to all of the sale. Because you can, the investor or the exchanger cannot have constructive receipt of the funds. The funds do come directly to us from the closing attorney or agent or, title company or whoever is settling it.
Not the seller. It doesn't come from the seller individually, ever.
That's correct. Yep. They never touch it. So they cannot have constructive receipt of funds. So we hold those segregated sub-account. It's in their name, but they can't walk into the bank and try to take it out.
Right. It's their money. It's their money. So
that's right.
The only thing that's holding it back, is it going to be taxed at the rate right now, or is it going to be taxed later? And the end part of the death tax, if you will, the end part is it can be deferred as long as you want. And
a lot of clients that's their strategy: defer until they die, and then when they die, their heirs will get a stepped up in basis, and their heirs really reap the benefits of that. So that's a very popular estate planning strategy that a lot of clients have.
Stepped up in basis, another buzz term, word, but in layman's terms, it's okay. I'm the person who dies. I don't want to be that person, but in this, I will. But so I'm the person who dies, and I bought the property for $226,000 back in 1950. And now I have this, 2.7 million dollar property, and so I have a lot of equity in that's been built up, and I don't want to pay that, so I leave that in specific code and in a way that I'm allowed to pass on that property, and the stepped up basis is then it gets valued at that moment. So it becomes 2.67, about whatever that number was. It becomes valued at that. And then the heirs only have to pay the taxes on what that is.
That's right. Yeah. And isn't that beautiful? I mean, that's a beautiful thing for them, because then they can turn around and sell the property for the $2.7 million the day that person dies, and not have to pay those capital gains taxes on it. You don't want it to become a burden. You don't want taxes to be owed upon death. You don't want them to have to all of a sudden inherit this huge tax burden. So stepped up in basis is really a benefit, I think.
It's a huge benefit in the estate planning if you can do it that way. Because, there's all different kinds of examples of what works. Let's talk about those versus the ones that don't work. Your family lived in a triple decker, and it was your personal private home, but you're going to sell it. But you're going to sell it and purchase an investment property where you're going to rent and be one of the renters. That's an okay thing to do. And that's one of the ways that personal property can become a 1031 tax exchange. The only way, from my understanding.
Yeah, so you can combine a 1031 exchange with the primary tax exemption, which under the IRS code is code 121. So if you have that in your instance, if you have that triple decker in, let's just make it very easy. If it's a $3 million property and each unit is valued at $1 million each, they're all similar in size, similar in everything. That $1 million, that primary residence can qualify for that 121 tax exemption, which gives you up to $500,000 tax-free for a married couple. So you can take that $500,000 off the table and then exchange the other $2 million from those other two units into a
Yeah.
1031. So it gives you kind of the best of both worlds, where you can combine those two tax benefits.
Yeah. Yeah. What is the term they call when is it legacy wealth, that you're building wealth that goes from generation to generation because you figured out how to use and this isn't cheating the country at all. The country is making plenty of it. They're just not
No.
making, what they would have made if you didn't know how to do this.
No, and it's not. Here's the thing, it really keeps the economy going. We had a real scare in the last year in that 1031 exchange was on the chopping block yet again for a tax reform. Everybody kind of looks to 1031 exchange that it's this loophole, and it's really not a loophole. It really is pushing the economy, and it's
Yeah.
moving the real estate market along. It's allowing people to sell properties that may not suit their needs anymore. A lot of times, and I'm sure everybody's seen it, that you see an elderly couple that's owned a property for 30 years. They don't really have the money, all of their equities in the property. They don't want to take out another loan. The house sometimes gets a little dilapidated because they're really not taking care of it anymore. It's better for them to sell the property, purchase a better property that might work or suit their needs better. And then an investor comes in and buys that property and builds it up. It's just generating this continuing real estate market, and it's generating everything that goes into that. So if you think with every 1031 exchange, there's always a seller and a buyer, but there's always people in between. There's attorneys and appraisers and realtors and inspectors and mortgage companies and all the transfer taxes and all the fees that go into it. And that happens for two transactions. So if there wasn't an exchange, if you couldn't defer those taxes, people would continue to die with those properties. They would continue to leave their heirs a stepped up in basis, and they wouldn't get transferred anyway. So the 1031 is actually encouraging transfers and encouraging the real estate market to boom.
And though, Michelle, you're absolutely correct with all of that. There is a lot of fees and costs involved in the purchase and sale of a property. We were talking about the benefit being the tax saved. I don't know if we're helping us by telling the public that, oh yeah, and we get paid too. I always try never to, and I do get it. I totally get it, but
Here's the thing, you work for that.
oh yeah,
And,
yeah.
there's a huge value to what the realtors and the agents and everybody in that transaction does. And the reality is that, and when I look at it, I have people that will come to me and they'll be selling $1 million property, and they have a $50,000 basis in this, two family in Somerville. They have a $950,000 gain. They'd be paying $100,000 in taxes.
Yeah.
So your fee, it's all kind of a drop in the hat. They would be paying this huge, substantial tax.
Right. Right. That is the way to explain it. Is that, and I've always said from when you start in real estate to you start where your values in your stomach, but the further along you go, the further up your value becomes, and ultimately it's what you know and what you've already experienced and how you can help and direct people, and that's actually what the show is about. With best ways to direct. 40% of your business is these first time people who will only do one 1031 tax exchange, perhaps in their lives. But 50-60% is investors over and over again. So do different investors, successful investors, do they change their approach to it? I know you have to be on the deed or something. So talk about some of the restrictions and requirements for a few minutes.
Sure. So yes, to answer your question, the savvier investors typically look at different types of properties, and they start to move away from those managed properties where it's day-to-day toilets, trash, tenants. They try to start to move away from that. Whereas those one-time investors, they know their two-family, they're comfortable with it. They may buy a single family, they may buy another two-family, but typically they don't move away from that kind of bricks and mortar property. Um, but what was the other part? Oh, so from a titling standpoint, yeah, it's really important. And I actually just wrote an article about this, but it is really important to know that there has to be a continuity of title, and a continuity of, like, the taxpayer has to be the same. So however you have hold title to the relinquished property is how you need to hold title to the replacement property. A lot of people are coming together and they're doing LLCs. It's a brother and a sister. They bought their property before they got married. Now they have this LLC. Now the LLC is actually the owner of the property, not the siblings. The LLC is. So the LLC will have to be the owner of the replacement property with the same ownership structure with the brother and the sister. So getting out of an LLC and trying to get people to do different things where one person wants to take their money and go and the other person wants to exchange, that's very, very difficult. So it's important to kind of get your ducks in a row, know what your exit strategy is for this property, and prepare. Tenants in common from a 1031 exchange standpoint, owning property as a tenant in common is the easiest, most streamlined way to go. If there are tenants in common, there are 2 or 3 people as tenants in common, everybody can do their own thing. One person can exchange, one person can take their money, another person can do a partial exchange. It makes no difference.
Sure. Then you're individually responsible for the money.
That's right.
So, because
That's right.
it's that on the paperwork. And, it's kind of simple, but if you don't know these things, it's not. Because people,
Especially every attorney in the world is telling you, if you're going to own an investment property, own it in an LLC. That's the way people want to take title to properties. It's easier to get a mortgage as an LLC. There's a lot of benefits to it. But when it comes to an exit strategy, and especially when people want to go separate ways, it's very, very difficult.
I'm going to back up a little bit. I don't know if it's easier to get a loan with an LLC. It's easier to get a loan with an S corp. That's for sure. I don't know if it's so easy with the LLC.
It depends, I guess. I'm not a loan officer, so I
Yeah,
probably
yeah.
can't speak to that.
Me either. So
Yeah, it's, from what I understand, it may be an easier way to underwrite it, but I truly don't.
it's
I don't know.
it's the way everybody wants to own it. I own 123 Main Street. LLC. Um, that's I see an awful lot of those, and that's not necessarily the best way to do it. And but I think in all of these things, you said every lawyer is going to advise you one thing or another, and they will. But they're all going to be making, oh, okay, that's more billable hours uh,
Well,
for me.
let's hope that they're advising them in the right way. And the reality is that there are benefits to it, and there are
Sure.
liability. The reason is a liability reason, I'm assuming.
Yeah.
So they're advising them hopefully in the right way, but they may not be taking into consideration what their exit strategy is going to be in 10 years when they want to get rid of this property. So it's just something that you want to think about as you start to contemplate what you're going to do with your
Right.
investment property.
Right. Right.
You can always change it and then just exchange it down the road. So it's
Right.
not like you have to hold it this way forever. You can change the title and then exchange it a couple of years later.
Right, right. And you've worked with investors who are doing multiple deals. Sometimes they'll be with multiple different people in multiple different
Yes,
deals. And
that's exactly
and
right.
you want to look to those people to figure out what's the best way, because they certainly are savvy enough to be able to move the money through, paying only the taxes that they're supposed to pay, rather than being in the wrong situation. Geez, is our time up? Who left their phone on? I don't
I shut mine off.
know. I don't invite myself back on the show ever again. Oops. Uh, but anyway, this is a really interesting topic, and I think it's a topic that people will research again. So I want to make sure that we get the right words in here. Really, to be a good 1031 tax exchange specialist like you have been for the last 7 years or longer,
Yeah.
you really do need to understand the difference between Gestapo and Gazpacho. So could you let the people know that what gazpacho is?
I think it's some sort of cold soup.
Exactly.
I'm Italian, so cold soup was never a thing.
Watermelon is another one of the cold soups too. Watermelon.
Oh, no, can't
Yeah.
get on board.
Anyway, that allows us to tag with gazpacho, uh, uh, Gestapo, and that's timely right now today.
Well,
I'm just trying to build the audience. I know people are really. Uh, when I first met you many years ago, and you taught this stuff, that I've used your information over and over again. So
oh, thank you. I think it's important. I think it's a great way for realtors to go in and have a conversation with clients. They always look to you as the expert. And if you can, even if you're not an expert in 1031 exchange, the minute you know about it and the minute you tell them about it, you are their hero. You are going to be their
right.
trusted advisor. And if you have to just direct them to me, that's fantastic, because the reality is that I get calls every single day where somebody will say, hey, I closed 2 days ago and my attorney just told me about the 1031 exchange. I'm like, you're too late.
Yeah.
Nobody told you along the way. You had a realtor, you had a CPA, you had all these people advising you and nobody told you. So yeah, you become their advisor. And guess what? You're going to get a sale, the listing.
Probably too.
You're going to get the listing, you're going to get the purchase, and you're going to be their person
Yeah.
when they want to go around and tell their other friends and their family. And if they have to sell again, you're their person.
This is why the Pareto principle is so demonstrated in the real estate industry. 20% of the real estate agents are doing 80% of the deals because they know what to do and they know how to do that. And that's really the best practice. If you don't have the experience, find people who have the experience and talk to them. Don't assume you know anything, because I love people who say something, they'll come up against something and they'll say, I've never experienced that before. Anybody who's a really experienced agent understands that every single day of your career, you have an experience you've never had before. So saying it
That's
is
what we do. There is nothing that fits into a box for some reason.
right, right. And it's why you go home and you say, they can't make this up, but guess what happened today?
I say the same exact thing. I'm glad we're in the same boat.
Yeah, it's so when somebody says they've never experienced something like this in 20 years, I say, you must not do much real estate then.
That's a good answer.
Well, I try not. I try and be a co-broke, and that's always the best thing is working, and then it comes back to the team. As a qualified intermediary, working with a good attorney, working with a good agent, working with a good investor, it goes smoothly, and
Yes.
you can do 10 a year. You could do probably more than that, but I'm old. I don't want to work that hard.
It is. We do, honestly, we love referring out our good attorneys,
Yeah,
our good realtors, our good
yeah,
advisors, because we know they know what they're doing and
exactly.
don't need those advisors. So it makes the transaction so much smoother.
Yeah, yeah.
Less stressful, because it's stressful.
It is. Well, anything with this much money is always stressful,
Of course it is.
and
Of course it is.
you kind of have to know what you're doing. It is a profession. You're learning every day. The codes are always changing. Houses are changing. Market is changing on a
Yes.
daily basis. And people don't really understand that. But I am a real estate agent, so I do work at this to try and be as good as you possibly can on a daily basis, because that's what you're measured on. It's today.
That's right.
What'd you do for this person? And did it work or did it not work?
That's
You,
great.
you better have more that works than doesn't work.
That's right. I told you earlier, it's always, it's hard when you work with somebody that is not competent.
Yeah,
Um,
yeah,
and working with a and competent broker is literally so important. And it's so important in the exchange process too.
Yeah.
You really need to have somebody that's good in
Yeah.
your corner.
Yeah. Um, it's been so much fun to have you.
Thank you. Thank you so
And
much for having me.
it's been great to have you.
Well, I appreciate it, and I look forward to seeing you at the next event.
Well, and thank all my listeners. This was Michele Fitzpatrick from Northern Bank, 1031 Tax Exchange Specialist. Come back next week. We have another great show. Thanks, Michele. Great seeing you again.